Hey guys, so you would have heard the headlines. Zomato, the company everyone knows for food delivery, is seeing its profits driven by something else entirely. But what people might be missing is the real investment angle to it. This isn't just a corporate headline about growth, it's the story of a massive, high stakes gamble that is completely reshaping the company and the entire quick commerce industry. But behind all the big talk and the billion-dollar numbers, the real question for you is, what does this mean for an investor? Is Zomato's acquisition of Blinkit one of the smartest strategic pivots in recent history, or is it a story of risky, aggressive expansion that could still backfire? See, you're putting your own hard earned money on the line. Don't listen to me, don't listen to anyone. Understand the logic. Today, we are breaking down this entire Zomato Blinkit story. We'll look at the strategy, the numbers, the explosive growth, and most importantly, what you need to understand before you make any investment decision. Okay, so first, let's quickly understand the corner Zomato was in. After its big IPO, the pressure was on. The food delivery business, while huge, was a brutal game. The fight for customers against rivals like Swiggy was relentless, fueled by deep discounts and high marketing costs. Margins were razor thin. For every 100 rupees of food they delivered, the actual profit was tiny. Now, this is the core of the strategic problem. India's economy is growing, but there's a natural limit to how many times a person can order food in a day. For a tech company, slowing growth is a death sentence. Zomato was the champion of a game that was becoming increasingly difficult to win. They needed a new engine for growth, something that could use what they had already built, a massive user base and a giant delivery network. Building a new business from scratch is slow and expensive. And in the world of quick commerce, where startups were promising groceries in 10 minutes, speed was everything. Zomato CEO Dipinder Goyal also saw a defensive threat. He knew that a strong, quick commerce player could eventually become a threat to the food delivery business itself. Why would you open two apps when one could deliver your dinner and your groceries at the same time? Zomato didn't just need a new market to play in, it needed to protect its home turf. In August 2022, Zomato made its move, acquiring Blinkit in a $569 million all-stock deal. On the surface, it looked like madness. Zomato, a company that was itself struggling for consistent profits, was buying another company that was bleeding cash. Investors were skeptical, and many analysts called the acquisition a massive risk. They were essentially buying a problem. But Zomato wasn't buying Blinkit's losses. They were buying its infrastructure and its speed. They were buying a network of hundreds of dark stores, small warehouses strategically placed in dense urban areas, stocked with everyday items. And most critically, they were buying time. Instead of spending years building this complex network themselves, they acquired it overnight. The core thesis was synergy. Let me help you understand this. Blinkit's single biggest cost was last mile delivery. Zomato, with its existing army of delivery partners, had the most efficient delivery network in the country. The plan was to plug Blinkit into Zomato's logistical machine. Riders could deliver food during lunch and dinner peaks, and then deliver groceries during the rest of the day. This would increase utilization for the fleet, lower delivery costs for Blinkit, and increase earnings for the riders. It was a bet that 1 plus 1 could equal 3. To really get the scale of what happened next, we need to look at the numbers. This is the creation of a true quick commerce behemoth. For a while, the market waited. Then the results started coming in, and they were staggering. The first major proof point came in March 2024, when Blinkit turned adjusted EBITDA positive. The money losing acquisition was now operationally profitable, but the growth that followed was explosive. In Q4 of FY24, Blinkit's revenue more than doubled year over year to 769 crore rupees. Its gross order value, or GOV, which is the total value of everything sold, shot up by an incredible 97% year on year. But here is the critical point. The most dramatic moment came in the results for the first quarter of fiscal year 2025, the June 2024 quarter. For the first time ever, Blinkit's GOV, at over 9,200 crore rupees, officially surpassed Zomato's core food delivery business. The side bet had become the main event. While food delivery was growing at a respectable 13%, Blinkit was growing at a colossal 124%. As Dipinder Goyal had predicted, it was only a matter of time before Blinkit became bigger than Zomato. That time had come. This brings us to the most important part for any investor. What is the bigger strategy here, and what are the very real risks? Okay, let's break it down. First, the master plan. This isn't just a story about selling groceries faster. It's about Zomato's transformation into a hyper-local logistics powerhouse. Their strategy is built on what they call hyper-local density. This is corporate talk for packing more dark stores into every square kilometer of a city. This density creates a virtuous cycle. Faster deliveries lead to happier customers who order more often, which makes the whole network more efficient. A rider can drop off a pizza, pick up a grocery order from a Blinkit store nearby, and then deliver a package for their extreme service, all in one loop. And Blinkit is no longer just for groceries. It's expanding into electronics, beauty products, apparel, and more. Why wait a day for an iPhone charger from Amazon when Blinkit can get it to you in 15 minutes? This is a direct assault on traditional e commerce, using speed as the ultimate weapon. But now we have to talk about the risks, and they are significant. The number one risk is competition and execution. Zomato isn't alone. They're in a brutal fight with Swiggy's Instamart, the well funded Zepto, and now even giants like Flipkart entering the space. At the same time, they are on a massively aggressive expansion plan, aiming to go from over 500 stores in March 2024 to 1,000 stores by March 2025. This rapid expansion costs a lot of money upfront and puts huge pressure on profitability and their ability to maintain quality. Merging and scaling operations this fast is an unbelievably complex job. Before we get to my final verdict, a quick request. We spend a lot of time analyzing complex topics like this to bring you clear, actionable insights. If you're finding this breakdown valuable, please press the like button and subscribe. It helps your growth also, right? You would understand business and finance in a much more holistic, practical manner. So, what's the final takeaway for an investor? Okay, listen. Zomato's pivot with Blinkit is not a simple stock story. It is a strategic long term play on the future of Indian commerce. The company's objective is crystal clear: to build a dominant hyper-local logistics company that is essential to the urban consumer's life. The long term bull case is there. If Blinkit can maintain its lead, if the synergies continue to pay off, and if they can execute this massive expansion without major stumbles, the company could be far more profitable and strategically vital than just a food app. This could lead to a significant stock re rating over time. However, the short to medium term is clouded with uncertainty. That competitive pressure is not a minor detail, it is the central challenge. Execution risk is very high, and the path to 1,000 stores will be messy and expensive. Therefore, the verdict for you as an investor depends completely on your time horizon and risk appetite. For a short term trader, the high spending and intense competition present a massive risk. But for a long term investor who believes in the quick commerce story and has the patience for all the integration drama, this is a pivotal moment. You are watching the creation of a company that will be at the absolute heart of how India shops in the coming decade. The Blinkit acquisition was more than just a financial deal. It's a calculated gamble to build a war chest for India's future. It's a story of ambition, massive complexity, and very real risk. The vision is grand, but the execution will be everything. Now, I want to hear from you. What are your thoughts on Zomato's strategy? Do you think the potential rewards of this massive expansion outweigh the risks from competition? And are you holding Zomato in your portfolio right now? Let me know your take in the comment section below. Thanks for watching.